Today, we are tearing through one of the most consequential pieces of market analysis I've seen this year. It all boils down to one question that's suddenly dominating Wall Street and, frankly, Silicon Valley. Is advanced nuclear technology the only real solution to the massive energy demands of artificial intelligence?
And this isn't just theory anymore.
No, not at
Okay.
all. The buzz is built entirely around a major analysis report detailing a huge breakthrough agreement. Our mission today is to cut through the jargon and explain exactly what this means, not just for the stock, but for the future of energy. We are diving deep into OKLO Inc., that's ticker OKLO, and this new infrastructure agreement.
It's a textbook case. You have this mission-critical energy infrastructure colliding head-on with the explosive growth of AI. The analysis zeroes in on the recently confirmed, and it is enormous 1.2 gigawatt power campus deal between OKLO and Meta Platforms.
Pretty spoke.
And for you, the listener, this isn't just about a ticker symbol. It's about securing the literal electrical backbone of the next tech revolution.
And the market reaction, it just validates that scale. OKLO's price closed at $105.31. That's up nearly 8% in single session on huge volume.
And the analyst target is now screaming $150.
A potential 40% upside from here, based purely on this contract. We are talking about an AI nuclear boom. Okay, let's unpack this. Let's see if $150 is actually justified. So segment one, it has to start with the core headline, the Meta moment. OKLO confirmed this massive long-term deal with Meta for their next-gen AI data centers in Ohio.
And when you read the analysis, the magnitude is it's really something. They emphasize this is not some small tentative pilot program.
No, this is a significant utility scale commitment.
Exactly. To critical computing infrastructure, Meta is betting billions of dollars at this work.
And that bet is all about solving the elephant in the server room, the AI energy crunch.
Right. For months, the market's been getting really worried about where the sustained mission-critical energy for these hyperscale AI data centers would come from. These models, like the ones Meta's running, they need constant, guaranteed power. If that power drops, even for a moment, the computation fails.
Yeah, and the financial losses are catastrophic.
You see, intermittent sources like solar and wind, they're fantastic, but they don't offer that 24/7 high-density reliability that AI demands. That was becoming a huge financial risk for the big tech players.
So OKLO steps in with the answer, and the analysis is specific. Advanced fission.
Yes, the deal involves deploying multiple Aurora powerhouses.
And this is where we stop and clarify, because the Aurora isn't some nuclear plant designed from the 70s.
Exactly. The key difference here, the thing that makes this so appealing to Meta, is the design. It's small modular reactor technology, or SMR.
Smaller, passively safe.
And crucially, factory built. That modularity means Meta can put these units exactly where their data centers are, right there in Ohio. They get to avoid years of traditional construction and the insane costs of building out a huge centralized grid just for one location.
The analysis basically confirms the market is now pricing this in as a real deployable solution today.
Not some distant future tech.
That validation just changes the entire risk profile of the company.
Yeah.
When you see a commitment like this, a multi-year, multi-gigawatt deal, it tells the market this is a supply chain necessity.
It's not a luxury.
Right. Analysts are calling it the Tesla of energy moment. It's that inflection point where this innovative tech crosses over into mass commercial adoption by a major player.
It's amazing how fast advanced nuclear went from being a science fair project to, well, a cornerstone of Meta's entire infrastructure plan. And let's look at the strategic implications, because this goes way beyond just Meta and OKLO. If we connect this to the bigger picture, this deal sets a whole new industry standard.
Because the AI energy crunch affects all of them.
All of the Mag 7, Google, Amazon, Microsoft, they are all facing the exact same power dilemma.
Right. They all need that same guaranteed, dense, constant power for their own AI initiatives. They're all competing.
Precisely. The analysis implies that this validation by Meta could signal that the other tech players might not be far behind in securing their own advanced fission contracts.
It becomes an arms race for reliable electrons.
Exactly. If your competitor, Meta, has just secured its energy future, the pressure on you, Google, Amazon, to do the same increases dramatically.
But regulation is the monster under the bed here, isn't it? We've all heard stories of nuclear projects stalling for decades.
It's a huge factor.
This deal is massive, but the deployment timeline is totally dependent on the regulators. So what does the analysis say about the risk that this NRC license, which is expected in early 2026, what if it doesn't happen?
That is the critical central risk factor left, and the analysis tackles it head on.
Okay.
The street consensus suggests the next big leg up for the stock that jumped toward the $150 target is tied directly to clearing those regulatory hurdles.
So 2026 is the date to watch.
It's the milestone, yes. But the analysis argues that Meta's massive financial commitment actually de-risks the process itself.
How so?
Well, think about it. Meta would not sign a 1.2 GW contract unless their own internal diligence gave them extremely high confidence in that regulatory clearance.
Ah, okay. That makes sense.
Their commitment, according to the report, it signals they see the political and regulatory environment shifting to accommodate the urgent energy needs of AI. It's still an uncertainty, for sure, but the market is now anticipating success because of Meta's stamp of approval.
Let's dive into the financial data now, because we really need to explain why the market reacted with such force. We saw the price action was volatile.
Very.
That massive gap up to $114.35 at the open, that was pure excitement. But then it cooled off and consolidated around $105.
But crucially, the institutional interest was there. You saw it in the after-hours buying, which pushed the price up to $106.42.
That consolidation shows real conviction.
It does. But the most important number in this entire analysis, from a fundamental view, has to be the valuation shift. You see it in the PE ratio, which is now sitting at 25.09.
And explain why 25.09 is so monumental for someone listening.
Because before this contract, OKLO was essentially a pre-revenue startup. Their price-to-earnings ratio was undefined, it was negative, it basically didn't exist. The market was valuing them purely on speculation.
On a dream.
On a dream, exactly. Now, all of a sudden, they have a tangible multi-year revenue pipeline with one of the biggest companies in the world. A PE of 25 means the market is no longer treating them as a speculative bet.
They're being priced as a profitable growth company.
Yes. Putting them in the same valuation territory as, established industrial companies or stable utilities. This re-rating from the speculative bucket to the growth bucket is what's driving those huge $150 price targets. The company's whole financial identity changed overnight.
And let's talk about risk reduction, because that's huge for shareholders. The analysis points to the company's, estimated $1.2 billion in cash reserves.
That's right.
When you combine that huge cash buffer with the new guaranteed revenue from Meta, the analysis suggests the risk of dilution for current shareholders just plummets.
Absolutely. The company has a fortress balance sheet funding a transformative technology. They won't need to issue massive amounts of new shares to fund operations, which is often the biggest killer for these early-stage infrastructure plays.
And the analyst sentiment.
Wedbush already slapped a strong outperform on it with that hard $150 price target. The consensus is scrambling to catch up. Everyone's pointing to that higher trading band once the regulatory picture clears up.
Okay, moving to the technical view. This is where the market excitement meets the cold, hard math of the charts. The analysis describes the stock as being in a parabolic breakout.
Which means it's basically going vertical, straight up.
It aggressively cleared that huge psychological $100 barrier, and it did so on significantly high volume. That confirms this move is supported by real money, real conviction.
The technicals are just confirming the strength of the fundamentals. Key support has now formed at $104. So as long as the stock holds above that major $100 floor, the analysis says the trend is hyper-bullish. Any dip toward $104 is being seen as a buying opportunity, according to the report.
That said, you can't have a rally this big without volatility. And we have to address the technical warning sign mentioned in the analysis.
Correct. You have to look at the relative strength index, the RSI.
Right.
For the listener, the RSI just measures the speed and size of price changes. When it gets high, it means the price ran too hard, too fast. The stock is technically overbought.
The caution flag.
It is. But, and this is a bit, the analysis clarifies that this is often what happens during what they call supercycle breakouts. When news this big hits, momentum just overwhelms caution.
You should expect some wild swings.
Expect volatility, fast, sharp moves, both up and down, even as the overall long-term trend remains positive toward that $150 target.
And finally, let's talk about a critical market mechanic that's just pouring gasoline on this fire: the potential for a short squeeze.
This is key. Think of the shorts as people betting against the company. The source material says there's about 16% short interest on OKLO.
So 16% of the tradable shares are bets that the price would fall.
Yes. And when the House wins this big, with a 1.2 GW Meta deal, the shorts are tracked. They're caught on the completely wrong side of the trade.
They're forced to cover their position.
Exactly. They have to buy back the shares they borrowed, and they have to do it at the new, much higher price. This forced buying adds significant upward fuel to the price. It just exacerbates the rally, driving the stock even higher as they all scramble for the exits. So to synthesize all this, the Meta deal has fundamentally done two critical things, according to the analysis. First, it has commercially de-risked the advanced fission technology.
It proved it's real.
And second, it has drastically improved the company's financial profile, turning it from a speculative gamble into a profitable growth company. That's what justifies the valuation shift.
So the analysis verdict is pretty clear and bold. BUY, or accumulate on dips. They see a potential 40–50% upside from here as the company executes and gets closer to that 2026 NRC clearance.
And if we connect this back to the big picture, the analysis suggests you should view this as an infrastructure play for the AI revolution.
It's an AI pick and shovel story.
But the shovel is made of advanced fission fuel. AI requires guaranteed power, and OKLO is now being priced as a key provider of that guarantee.
So what does this all mean for you, the listener? It means advanced fission is no longer being valued as some futuristic, theoretical tech. It's now being valued as critical current infrastructure.
The kind of infrastructure that is absolutely necessary for the world's most powerful tech companies to continue their massive expansion. The price action simply reflects that necessity. And as a final provocative thought for you to consider, the analysis implies a definitive AI-forced shift in energy investment priorities, a shift toward firm, constant power sources. So, if advanced fission is now the required backbone for the AI revolution, what wider implications does this massive 1.2 GWW commitment have for, say, existing government renewable energy subsidies?
Or for the capital being allocated toward traditional large-scale nuclear plants.
Exactly. Is artificial intelligence now dictating our entire global energy infrastructure policy?
That is a fascinating question, and it takes us way beyond just a ticker symbol. The necessity of AI power might just redefine our energy landscape faster than anyone could have predicted. Thank you for joining us on